Good morning, good afternoon, good evening, in any case. I wanted to have a kind of styled video where it's more kind of, here are some ideas, concepts, and then here are my kind of viewpoints. Um, and so with that, today's talk will be more on asset inflation. Let me do it in this order: liquidity, asset inflation, interest rates, interchangeably swapping those two either way. So with liquidity, I find liquidity very interesting. It seems like liquidity is finally being pulled out of the market. You could say, at least I'm seeing this specifically with my trades, where the bid ask is kind of getting neutered per se, where the spread is substantially smaller. Like the spread's eroding, at least with certain tech names that I'm trading. With crypto futures or forecast events, I'm not seeing the same thing there, but I do think that like there's this more of a gambling effect per se, where it's just probabilistic, where I don't even know. I'm mixed on the whole forecast events kind of thing, where um, you know perception looks like it's gambling, while in reality it's pretty probabilistic. However, you're basically basing outlays or whatever the burn is for that week or for that trade within that specific trade allocation. Um, where does this money come from? Where does the liquidity being sourced from? I understand that in battling with this viewpoint, where the same dollar can get you 5 to 10 times the outlay with depending on how large of a player you are within the market, right? If you're a whale, your debt is effectively cheap. You can get 10x the freaking spending power for a tenth or whatever the interest rate would be, however that you go and syndicate that or source that. And that's all sourcing, right? This is all finance. Whereas, a smaller player, kind of a slave to your broker, a slave to whoever. If you're lucky, you might have connections with a bank and get a PA or personal loan. This is just, financial engineering. So down the road, right, we're gonna have this wealth transfer. I believe it's 72 billion. It might be trillion. I'm not certain there. At the end of the day, to me, it's all verbiage, where all this mystery money is going to come back down into the market somehow. I don't believe that's going straight to retail. I think 80 to 90% of that's going to be captured by institutional investments, entities, corporations, whatever. And then that last 10 to 20% is going to get captured by the retail market. And then leading from here, like, where's this money coming from? Who's this money from? Because it seems made up per se, where the buying power of someone with a 100 grand, at least with a broker, you could probably double that, maybe 1.25 it. Not so substantially much, but more than you have. So you have 100 grand, you have the buying power of maybe $250,000 on the high end. And that's specifically cash. Let's just say that's cash. I don't know how you'd work it. I understand it with cash flow, but I don't know how you'd work it specifically if you're buying something and then it's not cash flowing. It's kind of like collateral or a commodity. This is the interesting thing with gold, where gold's hit its all-time highs, 4,200, 4,400. I was listening to somebody talking the other day. I was like, the gold on hand they want to get rid of, and will it go higher? Will it crash? I don't know. And I think with like commodities and collectibles and things that are kind of, I don't know if it's second nature or something that grew up with like a different generation, but it's like, who's going to buy this is my real question. Like, you have to devalue something in order for somebody else to inherit it or acquire it, per se. I'll talk about this a little more in the not realty, but the asset inflation, which will lead into realty and some talk. So with that, you have all this whole weird sentiment where it's like, who's going to buy this? Who's that? You have inflation, give or take 8 to 16%. Recorded values are going to be, compressed. In my belief, I remember reading something from Jack Vogel where, the stated rates are going to be lower than the actual and a real. You can talk economics, but I'm at a point where economics seems to be some version of propaganda. So I think you have to keep some level of like commodity-backed or asset-backed finance, economics, whatever. I have this thing people want. I can provide a service people want, and we exchange capital. And that's kind of the baseline of my economic outlook, economic viewpoint. I have this thing, I have this talent, I have this whatever, I have this brain. You can try to price in somehow in the market. And so with inflation, not inflation, excuse me, interest rates. Interest rates are this interesting thing where in college, I was a believer of the Volcker mentality where it's like, all right, jack up interest rates to 20%. Let's wipe out the fake economy. I'm more so a believer in the ingenuity of the market and the survivor complex, where if you can borrow and afford to survive at a 20% interest rate, you can survive any economy. You can survive anything that comes your way. And I think there's so many fake jobs. I could point at HR. I know they provided some service of value. But when it comes to hiring, at least in my view, I believe that certain talent's mispriced and never gets to see the light of day. And then, at least currently, I'm at this perception, this viewpoint, whatever, that after a certain point, certain people crack and they'll just go their own direction and capture what they were looking for. This is certainly the case for me. I'm not certain if that's reflected overall within my generation. I certainly have more resources that I built myself, that I'm borrowing, and figuring out how to build it. And obviously there's ways to syndicate and capture whatever you want, but it is so fascinating that people want lower rates, easy money, easy times. Meanwhile, when the hard times come, everyone's bleeding, everyone's bitching, pardon my French, that it should be lower or it should be higher, whatever. And I just don't understand that viewpoint where you want lower interest rates. Meanwhile, inflation's eroding the cost of not the cost of capital, but the value of your capital, value of your currency, and so on. Where these things seem to be all like blended when it comes to like economics, patriotism, or national interests. I don't know. There's some weird concept where like certain people in charge are not the right custodians. And with that, either acquiring capital, assets, whatever, commodities, and just kind of let this thing erode and then say, oh, by the way, this amount of currency that was in circulation actually doesn't exist. I don't know. I'm really conflated with like the deflation versus inflation versus asset inflation per se, and leading into asset inflation. There's certainly a substantial amount of assets out there that have skyrocketed in value. Now, I don't know if this is a side effect of liquidity and access to more capital. There's more money than ever, and I don't know if that sits well with me. I don't know if that's good or bad. I do believe that prosperity is kind of a necessity. Kind of, if nobody's working towards creating more prosperity, what's the point of participating in your economy, participating in hiring, participating in the overall societal economic society, where you can create so much more money, so much more value for everybody, yet I don't know, key resources seem to be hoarded by unworthy custodians, unworthy I don't know, successors, where I don't know, this reinvestment anti-American attitude seems to have captured certain aspects within corporate society, where I don't know, I don't understand why a certain talent or whatever would be more satiable than your own countrymen, and it's strange. I don't understand it. I'll never understand it. I don't understand. Everything's pay to play, and yet we still don't let our own, prosper before someone that's not bought in. Very strange mentality, and I guess it's alien to me in a sense, where I think there's more fiscal or social responsibility when it comes to corporate entities, but at the same time, right, like I guess when you implement it from the top down as a startup, there is some level of it where it's like I can't afford hiring or trying to scale up. I can't afford to do this. Whereas at the same time, you'd expect it from some mega corporation, and with that, there's some weird level of like taxation too, where it's like, why is a corporate entity getting taxed at a substantially lower rate than the average American? That doesn't make any sense to me. But asset inflation, you have all these products, things out there, and there's these multivariate, things working with and against them, different participants in economies, different participants in markets, different commodities, assets, whatever. The easiest one to go for is real estate, where, how in the world does a product, an asset from 20 years ago have doubled in value? Where did that money come from? The only way I can see it is that now, the corporate entity of the American economy, or we'll say government, can now tax a property holder marginally more than they were already paying for this asset that they bought at this fixed price back whenever that asset was acquired, whether or not they were paying cash or with margin or debt, excuse me. It's weird. I don't get it, and it makes more sense to have some asset that doesn't even cost you anything. So, what if the real estate is just so confusing to me, where these assets keep increasing in value, or value per se, perceptive value, put it that way, just like crypto. Who's gonna buy this? Who's gonna buy this freaking $5 million house? Of course, there's more prosperity than ever. Who's gonna buy this asset from you for whatever you paid for it or more? If you a property owner, who wants to buy this from you? Who's gonna own this after you? Why would they buy this from you at some inflated price when what you bought for plus, I don't know, kick in 10-20%, minus whatever interest you paid on it, should be good enough. There's something weird with asset inflation, at least in my view, where a decent deal or something at fair value is like, all right, this is obviously appreciated, but I don't want to pay more than I need to or have to. And I don't think that's being cheap, but I also don't see the point where certain things are so high. Meanwhile, it seems that there's no room to barter or bargain, negotiate. Whereas, certain aspects where it's like you have all this capital, it's like, who cares if get rid of the thing for a loss? It's easier to get rid, like the value of liquidity seems to be substantially higher than holding some asset that you can't get rid of for, I don't know the real estate market, but like some 6 to 8 month, maybe 12, 18 month holding period, maybe 24 months. So I don't get it. It seems substantially strange, and maybe this is an effect as a trader where, you can buy an equity and then keep selling derivatives, options, whatever, against it every single week if you can structure it correctly and get some level of capture, capital appreciation or capital capture, cash flow, whatever, in that range of like sub 1% to 2% weekly. And I don't know if that's a good thing, but certainly this weird, strange economic market, this work market, whatever, labor market, has pushed me into this liquidity viewpoint where who cares about the asset, who cares about this, as long as I can make some cash flow out of it. But that's multifaceted, and I can go into that for a while. So anyway, thank you for watching, listening, whatever. I'll be trying to do more of this. It's just kind of hair trigger. Just turned 25 last week, and I was like, I should probably get my thoughts out here and there when I have them. So thank you, and subscribe, don't subscribe, ring the bell, whatever else. Later.